Okay, so we're gonna do week 5 assignment number 3 together. So whoever actually takes the opportunity to watch this video is gonna be super excited because they can possibly have a 100% on this problem. So A, let's do A. The supplies available at the end of fiscal year 2017 had a cost of $3,300. So in this particular example, we are given a trial balance. So at the top, you should see 101 cash. Let me see, the problem is for Ace Construction Company, and the cash says $18,500 debit. It's adjusted trial balance June 30th, 2017. So that is what everybody should see as of right now. And I'm also showing my class the actual problem on the ceiling. So you guys can't see it, but just know that it's on the ceiling right now. All right. So the first problem says the supplies available at the end of fiscal year 2017 had a cost of $3,300. So we're gonna create our T table first, all the way over there in that corner. So we're gonna think about what T tables are going to be impacted. The supplies available at the end of fiscal year 2017 had a cost of $3,300.
Wouldn't there be cash and supplies?
So it's going to be
Or
supplies expense, because we're going to expense some supplies. And the other account is going to be supplies. The reason being is now we're going to write off some of the supplies that we that we purchased earlier in the year. So it's going to go from an asset to an expense. So what we need to know is, what was the account balance in supplies before we are doing this adjusting entries? So if we look at the trial balance, it looks like the supplies balance is $9,900. You guys see that?
Mm-hmm.
So the balance beforehand was $9,900.
For supplies?
And yep, so you can put it up there. This was, yep, $9,900. So that was the balance before. And now we need to make an adjustment to it. So it only has $3,300 at the end of the year. So what do we want our balance to be? $300,
Yeah.
correct? So let's go ahead and do our ending balance of $3,300. So you're gonna draw a line at the bottom. Yep, and you're gonna do our balance, that's $3,300. So if we're gonna do that, so then what entry should we create in order to get our balance down to $3,300? Yep, so let me get my calculator out. So I'm gonna say $9,900 minus $3,300. So our entry needs to be $6,600. Everybody okay with that?
Mm-hmm.
All right, so what happens to our supplies expense account? Does it go up or go down? It goes up by?
6,000.
I completely agree. And then what is our offset entry?
The 3,300.
So we did a debit to supplies expense of $6,600. What's the other part of the entry? A credit
Yeah.
of
Same thing.
$6,600 to the supplies account. Credit. Minus does not mean credit.
I know.
Okay, so the actual entry is going to be $6,600 debit to supplies expense and a $6,600 credit to supplies, right? So let's do our green marker and let's credit that circle the actual entry, just so that we can recognize what the entry is. So circle this, yep, circle that one. And then circle the other 6,600. So that's our actual journal entry. So over here, let's start our journal entries.
Up here?
Yep, all the way to the top, as high as you can go. Yep. So what is your debit and what's your credit on this entry?
Supplies expense goes first.
Yep.
And then, okay.
Remember to indent your credit when you do create it.
Oh, okay. I was just gonna do it like,
That's fine. But everybody know that it doesn't go directly underneath it. It's indented a little, right? So if you ever look at the journal entries, you'll notice that like there's like a couple of spaces before they start supplies, before they start the credit. Have you guys noticed that?
Mm-hmm.
Okay. So just scoot it over, start the S underneath the P for supplies.
right here?
Yeah. Just so that we know and we recognize that it should be indented. Okay, so there's journal entry 1, right? Let's do 2. Who's doing B? Miss Angela? Thank you.
So B is the cost of expired insurance for the fiscal year is $3,800.
Mm-hmm. So cost of so remember, these are end of the month, end of the year type transactions that we need to have in order to make our balance sheets and our financials, to make all of our financial statements accurate. So the one you're going to do is the cost of expired insurance for the fiscal year is $3,800. So you need to know what 2 entries are going to be impacted. So what are our entries? What 2 accounts are going to be impacted? So what's our accounts?
Prepaid insurance
Yes.
and accounts payable.
It is going to be,
No, prepaid insurance, I can't really see. And insurance expense.
yes, 100% accurate. So those are going to be our 2 counts impacted. Go down a little bit more so we can have some room.
Is this the dead one?
I think it just goes out, like, change the how you're holding it. Try that. Yeah. So we got prepaid insurance as one T-table account, and what's the other T-table account?
Insurance expense.
Yes, ma'am.
I'm gonna get you another one.
All right, so go ahead and do our plus minuses and our debit credits.
Okay, expense is the plus minus.
I'm gonna get you another one.
And prepaid is a liability, so this is a debit credit. So this is a.
Plus minus and plus minus. Okay.
Plus
All right.
minus for both of them?
Do you have plus minus?
Yes,
No, no.
minus plus for
Plus
prepaid.
expense.
Oh, prepaid insurance. So prepaid insurance, so you ask
It's an
yourself,
expense.
is it a liability? Well, prepaid. So if you're trying to figure out what type of an account a prepaid is, you need to ask yourself, if somebody doesn't go through with whatever this is, who's going to owe who money? So this is a prepaid insurance, meaning that if we don't utilize this, we get to keep our money, and it's an asset for us. So since it's an asset for us, in my opinion, it's a plus minus. Because
Prepaid is?
yes, because it's actually ours. If we decide not to do it, then they owe us, not we owe them. Unearned revenue would be a minus plus, because that means that if we decide not to go through this, then we owe that person money.
Okay.
And we'll see, don't change it, because we'll see in a second what happens. Okay? So, they're asking us, they said the cost of expired insurance for the fiscal year is $3,800. So they want us to utilize $3,800 of an expense, right? So we want to increase our insurance expense account. And is that going to be a debit or credit?
It's gonna be debit.
Yep. Ooh, that is pretty.
Ain't it perfect?
Ooh, go ahead and put your D and your C up there, so everybody knows that that debit is on the left-hand side and that credit is on the right-hand side. Okay, so by default, the other side has to be a $3,800 yes. Okay, so this is how you know that the plus minus minus plus is incorrect, because we're not increasing prepaid insurance. What are we doing to prepaid insurance? We're making it go down, because the balance before was $7,200. So let's go ahead and erase that $3,800. Yes. Well, I like it. It's correct, but I want to put the prepaid balance, account balance on there first.
Okay, so 78 here?
Nope.
Here.
Yep. Because that was the balance before. And I am increasing or decreasing that account balance.
Decreasing it.
I'm decreasing it. So the others, nope.
72.
So it's going to be on that side, $3,800. Here you go. Ooh.
Using it, that's what
Oh.
I'm saying.
We got to use, we using our erasers.
Yeah. I did you fair enough.
Well, I was going to do the inside.
Is the 30, are you going to the adjustment or the adjusted trial balance?
Which one? The 3,800
Yeah.
is 3,800 is the actual adjustment. I'm just trying to show her how that minus plus is inaccurate.
So
Because
my minus plus is inaccurate.
and this is how you know. Because if you look at that trial balance, although it's on our ceiling,
Uh-huh.
the previous balance is a debit of $7,200. Remember, it's the third one.
Okay, 72 debit.
Yep, so it's a debit. So that debit is an increase because that's a positive balance. That's where, so previously in the year, we increased it from 0 to 7,200 to show that we prepaid for insurance,
Okay.
right? So prepaid insurance is a minus plus.
I have it.
I mean, I'm sorry, a plus minus. Plus minus. So it's a couple of things that tell us that that's a plus minus. First and foremost, the balance on the account is always, the balance on the trial balance is always,
So wait a minute, so both
ahead.
of these are expenses.
prepaid insurance is an asset.
That's what it is.
So the reason why it's an asset is because we are actually holding on to the thought
Of it being there.
of it being there, right?
Okay.
It's either going to be in cash or we've paid it already, but it's still our money. That's still our money. That $7,200 is still ours. The only time it becomes not ours is when we utilize it.
Okay.
So the adjusting entry is because no transaction happened throughout the month or throughout the year to say, hey, we've now utilized some of that $7,200. So our adjusting entry says we need to create an entry so that our account balance are more accurate. So let's create an entry to show that we actually did use $3,800 of that $7,200.
Okay, so then this is wrong. It should be over here.
That's correct because insurance. So the $7,200, that's the beginning balance. So put a BB next to it, a small little BB, beginning balance. And on her supplies, go ahead and put a BB on 9,900. So we'll just use our BBs to show ourselves. This is not a transaction. This is our beginning balance. Does that make sense? Okay. So the actual entry that you created was to say the cost of expired insurance for the fiscal year is $3,800. So we're going to increase our insurance expense of $3,800, and we're going to decrease our prepaid insurance by $3,800. Why is that? Because we utilized $3,800 of the $7,200 of prepaid expense. Here's your green marker. I want you to circle our actual entry. I know that light is bright. So circle those two 3,800s. That's okay. So this is our actual entry. Okay? So then I want to have you create your journal entry. What are you going to start with?
Prepaid, no.
What's the rule?
Insurance expense,
Yes, but what's the rule for creating a journal entry?
debit first.
Yes, ma'am. All right. Okay. And then what's our credit? Mm-hmm. Prepaid insurance. All right. So that is our journal entry for B. Now let's go to C. Perfect.
Oh, goodness, okay.
All right. So C says annual depreciation on equipment is $8,400. So, in this example, we have to increase or decrease our depreciation. So two accounts are going to be impacted. What are those two accounts?
The accumulated depreciation.
Perfect.
Equipment.
And what's the other?
And the depreciation expense.
Correct.
Equipment.
Correct. Accumulated means how much have we depreciated all this time,
Yeah, like how
and then
much we use.
Yep, so that's going to be a running balance. The other one is going to be depreciation expense, and that shows what the expense is. Okay, so go ahead and draw your T-tables. While you draw your T-tables, make sure you do the plus minus and the DC. I'm going to find myself another green marker. Thank you for stopping. Okay, so we have depreciation. Oh, it's so much colder in here. Depreciation expense, and then we have accumulated depreciation. Accumulated depreciation is a contra asset, so it is minus plus. Depreciation expense is an expense, so it is plus minus. I love it. Okay, so it's given us the number. Annual depreciation on equipment is $8,400. The previous balance
Was $26,250.
was $26,250, and it's telling us, well, for this year, we want to add the $8,400,
So you're going, so this is $26,250.
and that should have a BB next to it because that's the beginning balance.
And then I'm gonna add, what was it, what?
$8,400.
So I'm gonna go over here to my debit
Mm-hmm.
and do 8,400.
Yep. And then where's your credit? Yep. Mm-hmm.
Yeah, this is my credit.
And that's your debit.
This is my debit.
So go ahead and put your $8,400 on the credit side for accumulated depreciation.
Oh, right here.
Yep. Because now what's your balance in accumulated depreciation? Oh, you need a calculator. Hold on. So 26,250 plus 8,400, 34,650.
34,650.
Yep. All right. So let's talk about this. So accumulated depreciation equipment, if we look at our trial balance, the beginning balance was 26,250. That was as of whatever time before we recorded any depreciation. Okay? So we need to increase that account to show that the new accumulated depreciation is now $34,650. Now, for the depreciation expense, we notice that the depreciation expense says 0 on the trial balance. So they're basically saying, hey, we have not depreciated anything for this equipment yet, so we need to apply something to depreciate it, okay? So what we're going to depreciate, though, is the $8,400 that they gave us. So now our balance for depreciation expense is going to be $8,400 as a debit, okay? So that is perfect. So just create our journal entry. Oh, please circle your journal entry. I think I just brought a blue one. It's right there.
Oh, okay.
So circle your actual journal entry transaction and then create your journal entry. Hopefully that marker works. What numbers are you gonna use for your journal entry?
We're debit first,
Yep, so
This
circle
one?
that one, And then what's gonna be your credit?
this one?
Yep. No, cause if you do that one, is your journal entry gonna be balanced?
No,
Nope.
this one.
Yes. Journal entry has to be balanced. Your debits must equal your credits,
Right,
right?
right. Okay.
All right, so go ahead and create your journal entry.
Alright, so we had depreciation expense. Equipment and 8,400.
Mm-hmm.
And then we have accumulated.
Depreciation.
Equipment.
Mm-hmm.
8,400.
Yes, ma'am. All right, so then you're done.
Awesome.
And so now you're gonna have, the next one says the June utilities expense of $650 is not included in the adjusted trial balance because the bill arrived after the trial balance was prepared. The $650 amount owed needs to be recorded. Okay? So they're basically saying, hey, we got our utilities bill after we created our initial trial balance. Okay? So somebody needs to take that receipt and make a journal entry to put that expense into the current year. So we're gonna impact two different T tables. So what are our two T tables?
Utilities or utility expense?
Utilities expense. And whatever T tables we use, it's included in the trial balance already, so we don't even have to come up with our own. And so the other account, so the key here is, have we paid for this?
No.
No, we got a bill for it.
So if you owe something, is that accounts payable?
That is gonna be accounts payable. So our other T table is gonna be AP. Yep. Yep. All right, so let's get our plus minuses, minus pluses, and DCs up there.
Accounts payable minus.
Mm-hmm.
And
Because accounts payable is a liability, correct?
then utility expense, well, expense sounds like plus minus.
Yep. All right, make that plus a little bit darker for the people in the back. Okay. All right, so then what happens to our two accounts? Are we increasing or decreasing our expense account? And the dollar amount is $650.
So you didn't balance before, so are we gonna be paying it now?
We're going
Or
to,
do you be billed account?
we were billed it.
Okay.
So we owe this money.
Well, it's probably gonna increase.
It is. Because previously we owed nothing.
Right, now we owe.
And now we owe them now we owe them $650. So our beginning balance was $58.90. You can go ahead and put the beginning balance up there. Put a BB next to it. And we wanted to go up by $650. We owed, I don't know what we owed before. Doesn't matter. It could be 0 or $1 million. But now I know we owe $650 more.
Right.
So,
But it shouldn't be-
yep. Our debit equals our credit. Debit of $650. A debit and a credit of $650. So go ahead, use your blue marker and circle your journal entry.
Okay. So we're doing both 650s.
Yes, I love it. And then create your journal entry.
Okay, so debits first, that's utility expense.
Hmm.
Oops, I was about to write debits. So,
We don't have
oh, I
any
don't want to.
No, we don't have eraser. I'm using it to prop up
Right.
the projector.
Okay. That was 650, debit. And then, accounts payable.
Alright, I like it. Everybody else okay with it?
Yep.
Okay, so we only had the 4 transactions. Oh, no, I'm lying. Here's E. Who's doing E? Alright, so E says the company's employees have earned $1,800 of accrued wages at fiscal year end. So what are my 2 accounts impacted?
Wages expense.
Yep,
And isn't it wages payable?
it is.
I'm smart.
Yes, you are. That's exactly what it is. Let's get our DCs and our plus minuses together. All right, wages expense is an expense account, so it's plus minus. Wages payable is a liability, so it's minus plus, correct? It says the company's employees have earned $1,800 of accrued wages at fiscal year end.
Done?
Wages expense increased by $1,800. Wages payables increased by $1,800, meaning that we now owe $1,800 for the wages we can expense because we utilize their services of $1,800. I like it. Create a journal entry. What's our rule on creating journal entries?
Wages go first.
Debits go first. Everybody like it? Alright. I love it. Okay, so what's up next? F, the rent expense incurred and not yet paid or recorded at fiscal year end is $500. So we utilize this rent expense. We have not paid it.
So it's rent payable and rent expense.
Rent payable is an option. Yes, that's correct. And rent expense is the other. I agree. All right. So the first one, it says rent payable. All right. So what type of an account is rent expense?
Huh?
What type of an account is rent expense? Of the 6, it's an expense account, so expenses are plus minuses. What type of account is rent payable? Payable?
Liable.
It's a liability, so
Got it backwards.
yeah.
Ah, you always do that.
Yep, so all payables, all liabilities are minus pluses. You have to start with those 6. You start with those 6, and then you got it.
I was at liability. I'm gonna put
Liability. Yeah, I like
There
it.
is.
That'll help.
Liability.
You'll remember it every
I
time.
got it now.
So it says that we have rent expense of $500. I like that rent. It's nice and cheap.
So it's what, 600?
500.
500.
Mm-hmm.
So expense of 500 means it's gonna,
Go up, I agree.
500 go up.
Yep. But we owe them now, right?
Mm-hmm.
And so our payable goes up as well. Correct? Journal entry away. I like it.
Liability. I got an acronym.
Liability.
So, debit goes first.
Yep.
So it's rent. Expense.
And I would do this on a sheet of paper.
Mhm.
I would do these on a sheet of paper, and I would take my numbers and I would put it on the problem. Because this should be at least two, well, I don't know if they have T-tables on this, but the journal entry is definitely the answer. But you got to create the T-table in order to get the journal entries. I love it. All right, so next we have additional property taxes of $1,000 have been assessed for this fiscal year, but have not been paid or recorded in the accounts.
Okay, so we're gonna have a property tax expense,
Yes,
and we're gonna have property tax
payable. Yep, I like it. Meaning that,
Okay.
meaning that we owe somebody for property taxes, we just have not paid the money yet.
Okay, we got
Perfect, I love it.
Okay.
Now, why are
So-
they what they are? Property tax
Because
payable?
Property tax is an expense.
Yes. And
an
because
expense is always, right,
plus minus.
yeah,
You're correct.
okay.
And then property tax payable is
Liability.
yes, and liabilities are always
A minus plus.
yes.
Okay, so what's the total of the,
It says additional property taxes of $1,000 have been assessed for the fiscal year and have not been paid.
okay, and what's my total
1,000.
on it, don't I have?
Oh, the
a-
previous balance.
Yeah,
So the previous balance of property tax expense is 7,800.
okay,
So property tax expense is 7,800. Make sure you put the BB next to it so we understand that's the beginning balance.
okay.
And we
then-
want it to go up.
Yeah, so I'm gonna put my 1,000 here,
Yes, ma'am.
okay, that's gonna be 8,800.
Yes, ma'am.
And then, so I'm gonna go over, take my 8,800, I'm gonna take it over here.
Nope.
No, my 1,000.
Yep.
Because I only paid 1,000.
You only owe $1,000.
Yeah.
Yep. So then circle your journal entry. The B, yep. It's not blue, but I got it.
Oh, I had to circle mine.
It's okay. You only have one entry up there, so I let it go.
Oh, me too, I'm sorry.
Yep, same thing for you. All right, and now we're gonna create our journal entry. What goes first?
My debits and my property tax
Expense.
expense.
Yes, ma'am.
Is 1,000. And then I'm gonna put property tax payable. Correct?
Yes.
Okay.
Okay. Last one. The long-term note payable bears interest at 12% per year. The unadjusted interest expense account equals the amount paid for the first 11 months of the 2017 fiscal year. The $250 accrued interest for June has not yet been paid or recorded. So, the good thing is that it looks like they do the calculation for us. So they said the notes payable and unadjusted interest expense. So interest expense is $27.50. They tried to give us a bunch of clues. They said the $27.50 is for 11 months. So that would be $250 a month. They're basically telling us, hey, you need to record the entry, the adjusting entry for December. So we know that that entry is going to be for $250. So first we need to go ahead and log our 2 T-tables. So what are our 2 T-tables?
Notes payable?
Notes payable, because they told us that that's what they want us to use. Although I don't see notes payable. Okay, it says LT, and so long-term notes payable. So I do see it. Yep. All right, so that's one T-table, and what's the other T-table?
Something interest.
Yep, interest, what? Yep. So interest expense is going to be the other T-table. Wouldn't it? Mhm.
That's
Yep.
plus minus.
Mm-hmm. Yep.
Payable sounds like a lot of.
Yep. Liar payability. I like it. Mm-hmm.
And I $250.
Yes. Mm-hmm. Yep.
Okay, so, so I mean, guess this is when that we still need to pay.
Yes, it is.
Okay, well, then, if we still owe money to put it on the plus side of the table.
I agree.
And then, opposite debit, credit would be debit, so we'll put it over.
Debits equal credits at all times. I love it. Okay, so they have this note in here that says the company required to make $5,000 payments on the note payable during 2018 fiscal year. Do we care about that?
Yes.
Not today.
Okay.
We don't care about it because we're closing 2017. So we don't care what they want us to do for 2018 just yet. So go ahead and do your journal entry. Accurate. I love it.
And then debit is the interest expense.
Mm-hmm.
Yeah. Long-term notes payable.
It's long-term notes payable. Because they tell us in the problem, it says the long-term notes payable bears
Okay.
interest at 12%.
But it wouldn't let us go in and put that in it.
The
Mine says
unadjusted interest
25
expense.
And then 5,000. You can't, it wouldn't let us go in. So we had to do it under interest payable,
You have to do it on interest payable.
of 250. Cause it, on mine right here, see, look, cause it automatically did it, it wouldn't let us change it.
The long, okay, so it's not the first time they've made a mistake, but if they telling us to use long-term note payable,
Yeah.
that's what you should be using.
No, it's interest expense and interest payable.
Yeah.
So, okay,
Interest payable,
250.
and then your interest expense.
I see 250. Yeah, 250.
Yeah, right there.
So maybe just change the name to interest payable?
Instead of long-term notes payable.
Okay.
I don't know why they would do that, but I'll take it. If that's what makes the problem right, then let's
Yeah.
go.
All right.
Okay, so required to A. So here's our journal entries. So A has a debit of supplies expense. So I'm just gonna go through and put in all of our journal entries that we created. So it has a debit of 6,600. Credit of 6,600 to the supplies account. So I'm just, thank you. Okay, so I'm just going through right now. It's gonna take me a couple of seconds. So there's one to just put the journal entries in. Hopefully you guys are doing the same thing. So we have insurance expense, insurance expense. All right, and that's gonna be 3,800, and then we have prepaid insurance of 3,800. All right, and then number 3 is going to be depreciation. Is it gonna be accumulated? Nope, it's regular depreciation expense. That's gonna be 8,400, and then depreciation accumulated is gonna be $8,400 credit. Oh, you could type these in, huh? And then D, A, B, C, D. D is gonna be utilities expense, and then that's going to be 650, and then accounts payable is gonna be 650 as a credit. All right, got that. So on to number 5. Number 5 says wages expense, and that's gonna be for 1,800. The debit says wages payable of 1,800, And then that's the journal entry. The credit is gonna be wages payable. And then number 6, which is letter F, so A, B, C, D, E, F. So we're doing rent expense. So rent expense. Can somebody go do a check next to where I'm at right now so that they know? Rent expense is gonna be
500.
500. And then rent payable is going to be 500 as a credit. Thank you.
Property tax, 1,000.
And then number 7 is gonna be the property taxes, so we're gonna have property tax expense
Property tax payable.
of, you say 5,000 or
1,000.
1,000. And then property taxes payable is gonna be a credit of 1,000. And then number 8, which is H, is going to be
Interest expense.
interest expense.
Interest payable.
So, are you guys sure?
Oh, yeah.
Yeah, because it would not,
It won't let you go.
And it said that that was wrong?
Yeah, it
Yeah.
has to
Why
be
would it say
interest-
that?
It has to be interest expenses and interest payable.
Maybe that's the 5,000,
And then
Okay,
you check your work and
250.
it's 250.
I'm gonna check my work. Like, I'm so amazed by this.
the unadjusted interest expense account.
You're right. Okay, do what they say.
But you have an error.
Yeah, on that, yeah, on this one.
Uh-huh.
The dollar amount is right, but they don't like my terminology.
Alright.
That is crazy. Okay, so I'm on required 2A, as long as you guys know that. And I am going to change this to interest payable, because they said so. Alright, so I'm done with required 2. Required 2A. I have not yet moved on to required 1 yet. So let me look at required 2. Okay, so we have not done our closing accounts. Alright, so let's go to required 1. So first line says cash of $18,500. When we did our adjustments, did we impact cash anywhere?
Nope.
Nope. So we have nothing in the adjustment column of
Okay.
required 1 on this particular problem. So I'm on required 1 right now, and I'm on the first line of cash. So we have no entry there. So adjusted trial balance is still going to be a debit of what?
18,500.
Okay. So I'm going to put under adjusted trial balance, I'm going to put a debit of $18,500 for cash because the balance is still going to be the same. Okay. So for supplies, the balance was $9,900, but I had journal entries. So did I impact that $9,900?
You did.
Can somebody go up to the board and show me what my new balance is of supplies? Okay, so our new balance is $3,300 because we did a journal entry to make it $3,300 when we did journal entry, the very first one of $6,600. So our new balance is going to be a debit of $3,300 in the supplies account. For prepaid insurance, the balance was $7,200. And can you put my balance up there because we didn't do that part?
Sure did.
Yeah, we didn't do the balance.
What do you mean?
So minus $3,800. So our new balance is going to be $3,400. It's going to be a debit or a credit of $3,400. Yep. How did you know that?
This is size higher.
That's a bigger side. Yep. So I'm going to do $3,400 there. So I'm going to do a debit of prepaid insurance of $3,400. This means that although we had $7,200 before, we've expensed $3,800. So our balance in prepaid insurance is $3,400. Oh, you better not do that to me.
It's been doing that. It did that to me like every time.
Okay. All right. It's still up. Okay. So the next one is going to be equipment. Equipment started off as $132,000. Where's our equipment?
Stayed the
It
same.
stayed the same.
Oh, it stays the same because it's an asset, and that asset always stays the same balance. The account that we actually impact the change on is always going to be accumulated depreciation. So we started off as $26,250 as a credit. We added a depreciation for that month of $8,400, so we ended up with $34,650. All right, so we have a credit balance of $34,650 going into the adjusted trial balance column. Accounts payable, I think we impacted accounts payable at least, or maybe we didn't, because I think we were doing, we did. Okay, so utilities expense, we impacted accounts payable on. So we had a balance of $6,800. Maybe we should have put our beginning balance on there. We didn't. Sorry.
What was the beginning balance?
The beginning balance was $6,800. We added a transaction for $650. So $6,800 plus $650. So it's $7,450.
So the BB was 68 what?
$6,800 was our BB. Yep. So we added the $650, which gives us our balance of $7,450. Okay, so to make sure that we are taking everything into consideration, can you take the black marker and cross out our journal entry that we've impacted over here? So we did supplies expense. No, we didn't. We did supplies. So just cross a line, not through that one, through supplies. Yep. And cross out the word supplies too. That way we just know. So we took care of that adjustment. We also did prepaid insurance. So we did that one. And then we did we didn't do anything equipment. We did accumulate depreciation. So that's under, yep. So we did that one. And then we did accounts payable. Utilities.
Under
Yep.
that, there you go.
All right. So next we're going to do interest payable. The beginning balance was 0 and now it's going to be $250. Okay, so there's the one next to it, but yes. So we had a credit of $250 added, okay. So we're going to do a credit balance of interest payable of $250 in the credit column for adjusted trial balance. The next one is going to be rent payable. So where's our rent payable? All right, so it's our rent payable. We have a credit of $500, so I'm going to put $500 on the adjusted trial balance column for credit. So go ahead and cross out rent payable. So we took care of that one. The next thing we have is wages payable. So we had wages payable, there we go. So we have a credit of wages payable of $1,800. So I'm going to put $1,800 in the adjusted trial balance. We're going to cross that out. So we took care of that entry. Next we have property taxes payable. So there's our property taxes payable. The entry was for $1,000. So we're going to put the $1,000 on the credit side because these are credit accounts that we're impacting. So that is done. Next we have current portion of long-term notes payable. Oh, they did that for us. Okay.
Because it wasn't impacted.
Because it was, yeah, we didn't do it. They did it. Oh, they did the adjustment for us. That must have been the example problem. Okay. So they did those for us, the $5,000 and the $20,000. And then the capital account, we have not impacted the capital account yet. We haven't impacted withdrawals yet. We haven't impacted construction fees earned, or did we? I know we did a revenue one, didn't we?
No, didn't you touch revenue?
We didn't touch revenue today? Okay. Wow. Okay. Fine. All right. So the balance for capital stays at $88,660. The balance for H withdrawals stays as a debit of $33,000. Make sure you guys are doing your debits and credits correctly. The $88,660 for capital was a credit. $33,000 for withdrawals is a debit. Construction fees earned, we didn't change it, so it's $132,100 as a credit because it's already a credit, so it stays a credit. And then depreciation expense, hold on, here we go, sorry. All right, depreciation expense for equipment, it did not have a balance, but we created a balance for it, so we're going to do a debit of $8,400. We can also see that on our T table as well, so go ahead and cross out depreciation expense. And there's our debit right there. All right, next we have wage expense. So there's our wage expense down there of $1,800. Expenses is a credit balance, I'm sorry, the debit balance, so we're gonna have $1,800 in the debit line for adjusted trial balance for wages expenses. We cross it out over there, so we know we took care of it. And then we're gonna have interest expense. So interest expense is $250. So we have more than one interest expense.
No, just one, it was interest payable.
Oh, that's insurance expense. Okay,
Insurance,
cool.
right.
All right, so we're gonna add $250 to the already balance of $2,750 because remember they told us that was 11 months already in there. So it's $2,750 plus $250 is gonna be $2,500. So I'm gonna put a debit balance of $2,500 in interest expense. And then I'm gonna have insurance expense. So where's that one at? Okay, there it is. So that's the prepaid insurance. We already did that one. So insurance expense, yes. So we're gonna do a debit of $3,800. The balance before was 0, so we're gonna put $3,800 as a debit to insurance expense. And then we're gonna have rent expense. Go ahead and cross out insurance expense over here on the journal entry. So we have rent expense of $500. Previous balance was $12,000, so now I have $12,500. That's for the entire year. Supplies expense. Okay, so there's our supplies expense. We had none before. Now we have $6,600 as a debit to supplies expense. We crossed that out on the journal entry because we took care of it. Next, we have property tax expense. So we added $1,000, so we have $8,800. All right, and then we have repairs expense. I don't remember seeing any repairs. So did we do utilities expense yet? Okay, so repairs expense stays at $2,910, and then utilities expense is increased by what?
$650.
By $650. So we have $5,890.
6540.
Okay. So we have $5,890 plus the $650 equals $6,540. Are we okay with that? So we have a debit balance of $6,540 in the
So it's not $7,540, it's $6,540?
well, the utilities expense. So the accounts payable did go to $7,450, but the utilities expense is now $6,540. Is that right?
Just making sure. Numbers
So
are
$5,890 plus $650 equals $6,540. Okay. Now the problem is I'm not balanced. My debits
Okay,
don't equal my
what's your
credits.
wages expenses?
Am I missing that?
Yep.
$1,800.
Oh,
46.
okay, I did that wrong. Okay, so I forgot to add the $1,800 to the wages expenses beginning balance. So $46,860 plus $1,800 equals $48,660. I'm off by like $500, so I probably did not adjust something. What was, okay, so interest expense, I put $2,500, but I should have put something else because the beginning balance was $2,750. So
Which
it
one
was
that?
27. So for interest expense, I subtracted it and I made it 2,500 interest expense. But it really should have been 3,000 because I should have added it. So 3,000 for interest expense as a debit, and now I'm in
Now you're
balance.
balanced.
Yep. So now I'm in balance. So my debits equals 291,410. My credits equals 291,410. I did that on purpose so that you guys can know that if you make a mistake, you gotta fix it and get your debits and credits
that's why
in
we up to
balance
3 in the morning.
before you
2 in the morning,
move
sorry.
before you
Yes.
move on to the next thing.
Uh-huh.
So let's check our work. We have all of those correct. So we have required 1 done. We have required 2A done. Let's look and see. Yep, we got all those done. So now we are on required 2B. So let's return to our question.
I can sit down now, right?
Yes. Thank you so much for your assistance, Mom.
Like Vanna White back.
Yes. So required 2B says record the entry to close the revenue accounts. So I'm going to erase this, and for sake of time. So you guys hold on for a second and let us erase. So that we can get through it and have the entire chapter 3 done. Chapter 4, problem 4, problem 3 completed. Okay. All right. And I need my Starburst. But I need to move it over a little bit. Okay. So we're gonna record our entries to close. All right, so we had 4 steps, right? Step 1, close revenues. Is that what they want us to close first? All right, what are my types of revenues?
Fees earned.
All right, so we got fees earned. What's my other type of revenue?
Income summary?
What's the
No.
other revenue? Is that the only revenue listed though?
Yeah.
Yeah, construction fees earned and income
And
summary.
summary.
Okay, so I have no other one. So I just do IS. So I think, I don't remember what, did we say IS was a minus plus? I think so.
Yep.
Yeah.
Okay, so what was the balance of fees earned? And you're gonna look on your required 2A, because we need to use the adjusted balances, not the previous trial balance. So,
132.
required 2B, I'm sorry.
132.
Okay. Wait, where's your
You want this?
required 1? Yes, sorry, you're gonna use what's on required 1. Alright, so here is your adjusted trial balance. Do we do these?
Yeah.
No, you didn't do
I
it
don't
on
remember
yours.
doing those. So I'm gonna have to go back and do those. So I didn't do this column.
But that one is 132, comma 100.
Okay.
So 132,
132,000.
okay, so the balance for construction fees earned is 132,000, so this was the beginning balance,
Income summary.
so,
Correct.
and I need to close it. I'm gonna do a credit of 132, 100, now my balance is 0. I'm gonna do a debit of 132, 100. Okay, so the next we have to close all of our expenses. So what are our expenses?
Income summary is,
No, what's our actual expenses on our adjusted trial balance?
depreciation, expenses for equipment,
Okay, what's next?
wages expense, interest
Okay.
expense,
Insurance
insurance
expense.
expense, rent expense, supplies.
Insurance expense?
Uh-huh.
Rent.
Rent expense, supply expense, property tax expense, repair expense, and utilities expense.
See, I gotta write all this down.
Utilities, what's after, property tax?
Repairs.
And then what's the next one?
Utility.
That's the last one?
Yep.
Okay, so all of these are plus minuses, right? For their expenses?
All expenses.
Alright, what's my balance on depreciation? And this is based off of the adjusted trial
Trial
balance.
balance.
Okay, you gotta take into consideration all the adjustments that we made.
All right, 8,400.
Everything is gonna be on the debit side.
Nope, use a credit.
No, they start off as debits, and then I'm gonna do the journal entry. I haven't done a journal entry yet. I'm just trying to find out what the beginning balances are.
All right,
So what's wage expense?
48,660.
Interest expense?
3,000.
Insurance?
3,800.
Rent?
12,005.
Supplies?
6,006.
6006?
6,600.
Alright, pre-property tax?
8,800.
Repairs?
2910.
And then utilities.
6540.
Okay, so we're gonna cheat. closing out all of these accounts to zero. Everybody see that?
Mhm.
Okay, so I did a debit on all of those to close them out, so my creditor is gonna go here. Okay, so that everybody is clear, this is my entry. This is my entry, this is my entry, this is my entry, this is my entry, 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 okay? This number was just to show my beginning balance, so on and so forth. Right?
Right.
So, the blue ones are my entry, so what was the total of all of those?
101,210.
101, 210?
Yeah.
Okay, so this plus 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 this equals 101,210. So, my net income is the balance, which is what?
The difference
Just that-
between them.
Yeah, just the difference between your 132 and 101.
What's the dollar amount?
30,890.
So 30,890, okay. So the first entry was this 132,
That's our construction fees.
this is the first entry, that's to close out revenue. And these are the close expenses. So this is our second entry to close expenses. So entry 1, entry 2, right? So we have, what's our debit? Fees earned. Fees earned is our debit, and that is gonna be for 132,100. Our credit is 132,100, and that's gonna be for income summary. Everybody okay with that?
Uh-huh.
Yeah. No, yeah, this is our credit.
Yeah.
Right, this is our debit. So our debit was first of fees earned, because we had to close this out to zero.
Yeah.
This is our debit. Because the regular balance for fees earned is a credit, right? And the new balance is gonna be zero, so in order to close it out, we gotta do a debit to it. So we did a debit, now the balance is zero. And then our second entry is gonna be for all of our expenses. We're gonna pretend that we did an entry for all of our expenses. So we're going to debit income summary. And that's gonna be 101,210. And this is gonna be all those expenses, right? To total 101,210 at the bottom. Let's pretend we did it. Third entry, we close out drawing. So what's our drawing account?
Our capital.
I think we'll close that drawing first.
This is our capital and then
If it's
drawing.
capital, then.
Okay, so they wanna close out income summary first? Okay, so our balance in income summary was 30,890. So the 30,890, the balance was previously a debit. So what do I need to do to close it?
Clear it out.
Create a credit, so 30,890 as a credit. So IS equals 30,890, right? And so we're gonna increase our capital account. I don't like that.
It should be
3890.
Yeah, but I don't like that.
You circled the debit when you did the IS, the
Oh,
3890.
okay, that's right. I'm like, I don't like that, that doesn't make sense. Because I would not normally increase. I'm gonna just put this right here.
There you go.
30,890. Okay. And erase this. Because my debit was income summary, which is here. This is my entry. And my credit is capital, which is here, 30,890, right? So I'm increasing my capital by the amount of money that we made for the year. This is my net income. Net income is the difference between revenues and expenses. So we made 30,890. but I just wanna use this account temporarily so I can close out all my revenues and my expenses. So now this balance is zero, we move that net income to capital. Okay, then our fourth entry, our final entry, is gonna be to close out our drawing account. So, drawing, what was our balance in drawing?
33,000.
33,000?
Yeah.
It was a debit or a credit? It was a debit, so 33,000, just like that? Or that, are you talking about before the entry?
Okay, but it says VA's capital, 33,000 debit, and then the withdrawals was a credit.
Yes, so he had with, so throughout the year, he took $33,000 of cash out of his business for his own personal use. So we need to close this account to zero. So I'm gonna do a credit to close it to zero, right?
Right.
Does everybody know why we're doing a credit? Because drawing is a plus minus.
Yep.
And I'm sure when you looked at the adjusted trial balance, the $3,300 was a debit balance. So we need to do a credit to make it zero. So we're gonna do a $33,000 credit as our entry. So drawing is gonna go second. So it's gonna be $33,000. And we're going to decrease our capital account by $33,000. Everyone okay with that? So that is gonna be all of our required 2Bs. Required 2A. Bright light, bright light. Hopefully everybody has this somewhere in their lives because it's gonna go away. The good thing is it's on video, and I'll post this video for you guys too. I'll send you a link for it. Yeah, it's on YouTube.
So now, 3A is prepare the income statement.
Yep, and I'm gonna bring that down because that looks kind of easy. All right. So as we're preparing the income statement, this looks easy. Okay. So my revenues was, what was it called?
The construction fees earned.
Construction fees earned, so construction fees earned, so I picked the blue right at the top. No, it's black. What?
No, it's blue. It's got a black hat on it.
My tops are wrong. Okay. Now I want to see it. Alright, construction fees. What's my balance?
132, 100.
132, 100. Okay, so this is actually before you do your adjusting entries, before you do your closing entries. So just list out all of your revenues and your expenses. So we had a ton of expenses. We had wages, utilities, what else we had?
Insurance.
Insurance, blah, 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 blah.
Interest, rent, flag, blah, blah, blah.
So all of that stuff goes here.
The total was 101,210.
Which is a credit, you can go, okay, so somewhere up in here, it was 101,
210.
101, 210. My guess is that it calculates the total for you.
Yep.
You don't
And
gotta
then the
put that
difference
there.
between it was the net income of 30,890.
So this is net income.
Yep.
So it wants you to decide whether or not it's income or loss.
Mhm.
You gotta
Right.
pick one or the other. And that's gonna be the difference between these two, which is what?
30,890.
And this is what we use to create our other entry as well. So that is your income statement.
3A.
That should be simple enough.
And then the next one is the statement of owner's equity.
And then it's 3B. Okay, here it is. All right, so the beginning capital was what?
53,660.
53,660. That was before we did anything. That was at the very beginning of the year. And then, is this net income next?
Now, owner's investment, and and then net income.
Owner's investment is 53,660.
No, no,
Well, he
that's
actually
capital.
invested,
So he put more
More.
money into it this year.
Yeah,
Okay.
35,000.
So he put more money into his business this year.
uh-huh,
35,000,
and then he added net income,
and then we add net income,
30,890.
30,890. So that's gonna do an adjustment of the two,
Which is 65,890.
and then this is your drawing. This your drawing?
Withdrawals, let's withdraw.
Okay. And then how much do we have in drawing? 33,000?
33,000,
So then what's your capital balance?
86,500.
Right, so you're gonna take your beginning capital, plus the additional investments, plus the money you made, minus what he took out to pay for his own personal expenses, to come up with the 86,550.
But in there, they also want you to add the 53,660 plus the 65,890 to get 119,550.
They want you to add what?
The
Here.
5360,
Uh-huh.
right, 53,660 plus the 65,890
Mm-hmm.
to get 1,000, because they give it to you.
Oh, so it's right here?
Uh-huh,
So this,
1,000.
so this is the 65,890.
Yeah, and then it's
And then the total-
119,550.
They calculated for you?
Uh-huh,
Okay,
and then
that's
it's
fine.
the 33, okay.
All right, and the last one is required C and
Everything in there.
so it should be everything but the revenues and expenses. Right?
Yeah, it's assets,
It's just the assets and liabilities and
equity.
annuities. Good luck. Y'all can do that. Okay.
So you will send us practice stuff.
I will send you guys some practice problems.